If you're worried about where to park your wealth in 2026, you should be. Right now, as we move through February 20th, the global markets are undergoing a great divorce. Most people think the safe play is either digital gold or AI software. But today, I'm showing you the exact framework to survive what analysts are calling the Great Liquidity Fracture. Look, we just saw silver explode to over $100 an ounce last month, only to watch it whip back into the 70s this week. Everyone is calling it a bubble. But while the retail crowd is panic selling their physical bars, something much bigger is happening under the surface. By the end of this video, you'll have the critical mineral framework, the same one that institutional whales are using to pivot out of failing SaaS companies and into hard assets. I'm going to show you the exact silver to AI ratio that is actually holding its value while the NASDAQ bleeds. Here's the proof. Look at the divergence between traditional software seats and AI hardware utilities over the last 90 days. The gap is widening, and if you're on the wrong side of it, your portfolio is a ticking time bomb. But before we get to the how, there's one hidden event that happened on January 8th that 90% of investors completely ignored. The U.S. Department of the Interior officially added silver to the critical minerals list. This isn't just a boomer metal anymore. It has been legally reclassified as a strategic technology asset. If you miss the implications of this one legal shift, nothing else I say about price targets will matter. We'll cover exactly why that changes the math for every ounce you own in exactly 3 minutes. Look, I wasn't always ahead of these moves. Back in late 2025, I actually bought into the SaaS is invincible narrative. I watched 15% of my portfolio evaporate in 3 weeks because I didn't realize that AI agents were about to replace the very software I was betting on. It felt like a total amateur move, but that failure led me to discover the physical AI bridge, the realization that you cannot have a digital revolution without the physical conductivity of silver. Step 1 is understanding the $100 trap. Most people see $100 silver and think, too expensive. But the PRO way is to look at the gold to silver ratio, which is currently screaming that silver is still the most undervalued asset on the planet relative to the AI energy it enables. But here's where it gets crazy. While you were watching the silver price, the AI software market just hit a valuation cliff that makes the 2000 dot-com crash look like a warm-up. Let's look at why your favorite AI stocks might actually be liabilities. If you're still holding traditional SaaS stocks like Salesforce, Adobe, or Snowflake, you are standing on a crumbling pier. On February 5th, 2026, a day now known as the SaaS apocalypse, the software world hit a wall. In just 48 hours, $285 billion in market value vanished. But this wasn't just a market correction. It was the death of the per-seat business model that has dominated tech for 20 years. Here is the brutal reality of 2026. Companies no longer want to pay $100 a month for a human to log into a dashboard. Why would they? With the wide release of OpenAI's Project Operator and Anthropic's Claude Co-work, we now have autonomous digital workers that bypass the interface entirely. They don't need a seat, they need an API. Remember that hidden setting I mentioned? Here it is. It's called seat compression. In 2024, a marketing team needed 50 licenses for their CRM. Today, in 2026, they need 2. One for the manager and one for the AI agent that does the work of the other 48. This is the problem B I warned you about. While AI is efficient, it is cannibalizing the revenue of the very software companies that built it. The guru advice tells you to buy the dip on these software giants. That's why most people fail. They are catching a falling knife in a sector whose fundamental unit of value, the human user, is being deleted. We're doing it differently. We're focusing on AI utilities. Instead of betting on the software, we are betting on the silicon and steel, the companies that build the physical infrastructure that these agents run on. Look at Nebius, ticker NBIS, and Applied Digital. While Salesforce dropped 25% this quarter, Nebius is forecasting a 521% revenue surge because they aren't selling software seats. They are leasing the raw compute power and high-performance data centers. Now, you're probably thinking, this sounds too complicated. How do I know which one to pick? But actually, it takes less than 60 seconds if you use the vibe coding shortcut. Vibe coding is the 2026 phenomenon where startups are using AI to replicate the features of massive SaaS platforms in a single weekend. If a startup can rebuild a company's entire moat using natural language prompts, that company's stock is worth zero. The mini win here is simple. Audit your portfolio for any company that relies on a per-user fee. If they haven't pivoted to outcome-based pricing by now, they are legacy tech. We are rotating that capital into the one thing that can't be replicated by a prompt: the physical minerals that power the grid. And that brings us to the real reason silver is the secret weapon of the AI era. While the mainstream media is busy debating whether AI will steal your job, the people actually building the hardware are quietly panic buying a 5,000-year-old asset. But they aren't buying it for their vaults. They're buying it for their motherboards. As of early 2026, the boomer metal narrative is officially dead. In November 2025, the U.S. Geological Survey made a move that changed the financial landscape forever. They added silver to the critical minerals list. This wasn't just bureaucracy. It was a signal that the U.S. government now views silver as a strategic technology asset, on par with lithium and cobalt. Why? Because you cannot have a 2026-era AI cluster without it. As server rack densities approach 100 kilowatts, traditional air cooling has failed. We've pivoted to liquid cooling, specifically silver-based thermal interface materials. Silver has the highest thermal and electrical conductivity of any element on the periodic table. It's 6% more conductive than copper. In a world where AI data centers consume as much power as small cities, that 6% difference in efficiency is worth billions in energy savings. But here's the US versus them moment the gurus won't tell you. While the gold bugs are waiting for a banking collapse, the AI engineers are worried about a supply collapse. China, which refines nearly 70% of the world's silver, just implemented rare earth-style export restrictions on refined silver as of January 1st, 2026. They are weaponizing the supply chain to ensure their own AI data centers in Shenzhen have the metal they need, leaving Western tech giants scrambling. We are currently in the 6th consecutive year of a silver supply deficit. The Silver Institute is forecasting a 67 million ounce shortfall for 2026 alone, even with prices hovering in the 70s. Mine production has already peaked and is expected to decline after this year as aging mines in Mexico and Peru hit their limits. The shortcut to timing this market: don't watch the retail price on your phone. Watch the COMEX registered inventories. When those vaults hit multi-year lows, which they are doing right now in February, the paper price eventually has to collide with the physical price. If you've made it this far, you're in the top 1% of people who actually understand that AI isn't just code, it's atoms. So here is the bonus tip. The real alpha in 2026 isn't just owning the metal, it's owning the miners who have the permits to extract it on US soil. Because in a trade war, a permit is more valuable than a pile of cash. If you've made it this far, you're in the top 1% of people who actually take action. So, here's the bonus tip I didn't include in the intro: the secret third pillar. While everyone is looking at data centers, the real 2026 silver vacuum is the humanoid robot. As of February 2026, Tesla has officially shifted Optimus Gen 3 into limited production at Giga Texas. But here's the technical detail the markets are missing. A single humanoid robot like Optimus or the Boston Dynamics Electric Atlas contains up to 15 times more silver than a standard laptop. Between the high-torque actuators, the tactile sensors in the fingers, and the central physical AI processing unit, these robots are literal silver sponges. China has already announced they intend to mass-produce 500,000 humanoids by the end of this year. When you apply the math, you realize that the robotics industry alone could consume 10% of the annual silver supply by 2027. This is the ultimate convergence. AI isn't just software. It's a physical entity that requires physical silver to move. So, where do you hide your cash? In 2026, you don't hide, you position. Here is the exact hybrid portfolio blueprint for the current market. First, 15% allocation to physical silver. In a world of agentic AI that can delete software moats overnight, you need an asset with zero counterparty risk. When you hold a 100-ounce silver bar, you'll notice the weight. That sensory heft is your insurance against a NASDAQ valuation reset. Second, 20% to AI utilities. Move out of the per-seat SaaS stocks and into the power and parts companies like Nebius, or the domestic silver miners like Hecla, ticker HL, and Coeur Mining, ticker CDE. These are the companies that own the bottlenecks of the revolution. Third, 5% into the Humanoid 100, the niche component makers for robotics, like the specialized sensor and actuator firms in the supply chain. The data finally clicks when you realize that the most digital era in human history is paradoxically becoming the most dependent on physical elements. Don't just watch this. Go audit your portfolio for seat-based software risk right now. Apply the 80-50 rule we discussed. If the gold to silver ratio is above 80, you buy the silver. If it's below 50, you rotate to gold. Currently, as of February 19th, we are sitting at a historic opportunity with the ratio near 64. Don't just stay defensive. If you want to see exactly which Humanoid 100 stocks are positioned to lead the next 1,000% rally, watch this video next, where I break down the Tesla Optimus supply chain in depth. I'll see you there.